Welcome to the Crypto Daily Brief, your source for the latest updates, market trends, and key insights in the world of cryptocurrency. I'm your host, AI Michelle, and this is a Magic Pod production by Podcast AI. Here are our top stories today. First up, Bitcoin is getting a decentralized exchange thanks to the Nomic Bridge. Union Labs has secured $12 million to expand their blockchain communication tech. Also, Ethereum's transaction revenue is on the rise following the recent U.S. election results. And lastly, Solana's activity is booming, though Ethereum's Justin Drake doesn't see it as a threat. Let's dive deeper into what's happening with Bitcoin and Ethereum. Bitcoin is making waves with its new decentralized exchange, or DEX, integration through the Nomic Bridge. This is a big step as it allows Bitcoin holders to engage in decentralized trading without intermediaries like BitGo or Coinbase. It's part of a larger push to leverage Bitcoin's liquidity across the broader crypto ecosystem. On the Ethereum side, there's been a significant increase in transaction revenue, attributed to the recent political climate in the U.S. This has led to higher staking rewards and more Ether being burned, which strengthens Ethereum's tokenomics and makes it a more appealing asset to investors. Now let's talk about altcoins worth watching. Solana is experiencing a surge in activity, mainly due to the popularity of meme coins on its network. While some see it as a potential challenger to Ethereum, Ethereum's focus remains on long-term improvements, like the Beam Chain proposal, rather than short-term competition. In terms of new rules and regulations, while there's no major shakeup at the moment, it's important for traders to stay informed about potential changes that could impact their strategies. Always keep an eye on the regulatory landscape. When it comes to tech stuff that actually matters, Bitcoin's integration with a DEX through the Nomic Bridge is a game changer. It emphasizes the move towards more decentralized financial systems, which is a key trend to watch. That's it for this segment. We'll continue to keep you updated on these developments and more in the world of cryptocurrency. Stay tuned for more insights and analysis on the Crypto Daily Brief. OwlTing Group is shaking things up by teaming up with MoneyGram International. They're making it easier for folks to convert their local cash into USD Coin or USDC using the OwlPay Wallet Pro. This service is now live at nearly 50,000 MoneyGram spots across 30 countries. It's all about giving people more ways to dive into digital assets. So, what's the big deal with this OwlPay Wallet Pro? It's a blockchain-based, unhosted digital wallet designed for cross-border transactions. USDC plays a crucial role here because it's a stablecoin backed by the US dollar, providing reliability and reducing the volatility that usually comes with cryptocurrencies. The integration with MoneyGram means OwlPay users can not only convert their cash into USDC, but also switch it back to fiat currencies. This flexibility is available in over 170 countries at more than 375,000 MoneyGram locations globally. It's a big move for OwlTing, showing their commitment to a versatile financial ecosystem. OwlTing has also upgraded all individual OwlPay wallets to an unhosted model, which is a big win for security and user control. This means users can manage their passphrases independently, boosting both accessibility and privacy. And if you're wondering, yes, these wallets are available on iOS and Android, so you can grab them from the Apple App Store or Google Play Store. This partnership is particularly exciting for underbanked regions, like Latin America and Africa. By enhancing the utility of USDC, OwlTing and MoneyGram are providing a stable alternative to volatile local currencies, which is a game changer in areas lacking traditional banking infrastructure. It's not just OwlTing making waves. In a similar vein, Nuvei Corporation has rolled out a blockchain-based payment solution in Latin America, targeting merchants. This initiative, in collaboration with Rain, BitGo, and Visa, aims to make B2B payments smoother using stablecoins like USDC. The takeaway here? Blockchain is steadily weaving itself into traditional finance, and stablecoins are at the forefront of this shift. These moves are all about expanding financial inclusion and modernizing how we handle payments worldwide. It's an exciting time to see how these technologies are reshaping the landscape. Let's dig into Crypto.com's latest move, teaming up with Mastercard to launch a card program in the Gulf states. So, Crypto.com has snagged a license to issue cards on Mastercard's network, which is a big deal. This new program kicks off in Bahrain and will soon spread across the Gulf Cooperation Council countries, including Kuwait, Oman, Qatar, Saudi Arabia, and the United Arab Emirates. This means Crypto.com customers can use their cards at over 150 million locations worldwide, both in-store and online. Talk about convenience. What's cool here is how users can fund their cards. You can do it through the Crypto.com app using e-money wallets or even third-party credit and debit cards. And for the rewards lovers out there, this card program covers all 5 Crypto.com card tiers, including the Black Obsidian, offering rewards up to 8% on your spending. All transactions are denominated in US dollars, which adds a layer of familiarity for users. Now, why is this partnership with Mastercard significant? Well, it cements the progression of Crypto.com's card program, which is all about making it easier for folks to spend their crypto assets in real-world scenarios. As crypto payments are gaining traction, this move highlights the opportunities and challenges for merchants. It's still new territory for many, so businesses need to clearly communicate which cryptocurrencies are accepted and any fees involved. Providing educational resources can help ease the transition for consumers. As crypto adoption grows, staying updated on regulatory changes is crucial for both consumers and merchants. The main hurdle for stablecoin adoption outside the crypto world remains the lack of regulatory frameworks. But as we see more partnerships like this one, it's clear that the industry is moving towards greater integration with traditional finance systems. It's also interesting to note that a lot of merchants are jumping on the crypto bandwagon because of lower transaction fees. Plus, they believe it could help attract new customers. There's a whole lot of potential here, especially when you think about how blockchain technology could be leveraged in regulated industries like healthcare and finance. So, the takeaway? Crypto.com's partnership with Mastercard is a step towards making cryptocurrency more accessible and usable in everyday life. It's a sign that crypto is steadily weaving its way into the fabric of traditional finance, and it's definitely something to keep an eye on if you're in the crypto game. Let's turn our attention to an exciting development in Central Asia. According to the latest report by Rise Research and Freedom Horizons, cryptocurrency ownership in Kazakhstan has doubled over the past 2 years. In 2022, about 4% of the population owned cryptocurrencies, and now that figure is estimated to be around 8% in 2024. This growth reflects a broader trend of increasing crypto adoption in Central Asia and the Caucasus. The report highlights that Kazakhstan is making significant strides in the digital assets sector. Supported by the Astana International Financial Center, the National Payment Corporation of Kazakhstan, Mastercard, and KPMG Caucasus and Central Asia, the report sheds light on how regulatory frameworks and business models are evolving in the region. Freedom Horizons CEO Kairat Kaliev noted that the crypto industry is expanding in line with global trends, with the region establishing a framework to support both trading and new blockchain-based business models. Kazakhstan's digital asset sector is not just growing in terms of ownership, but also in economic impact. Licensed digital asset providers have contributed significantly to the country's tax revenues, with a jump from $275,000 in 2023 to $367,000 over the first 8 months of 2024. Crypto mining activities have also added a substantial $10.4 million in tax revenue this year. The report also ranks Kazakhstan 57th in the 2024 Global Crypto Adoption Index, up 5 spots, while Uzbekistan, another Central Asian country, ranks 33rd, making an impressive leap of 54 positions. This indicates a robust growth in crypto adoption across the region, with Uzbekistan emerging as a leader. So why are people in Kazakhstan turning to cryptocurrencies? The report suggests it's due to the expanding value and popularity of the crypto market, the potential for high yields, and the belief in blockchain technology's ability to enhance transparency and financial inclusion. However, there are still challenges, particularly with banking integration, as many banks view crypto firms as high-risk clients, complicating their operations. Despite these hurdles, Kazakhstan has established itself as a significant player in the crypto mining scene, especially after China banned mining activities in 2021. Kazakhstan became a haven for miners due to its cheap electricity and initially lax regulations. However, the government has since tightened its regulatory oversight to manage the impact on the national electricity infrastructure. The report also notes that Kazakhstan's advanced fintech sector, with high banking penetration and digital payment solutions, is a double-edged sword. While it limits the crypto market size due to efficient banking services, it also positions Kazakhstan well for future digital asset integration. The country's fintech advancements make it easier to open bank accounts and access digital lending, showing a potential for seamless integration of digital assets into existing financial systems. Globally, the cryptocurrency market is booming, with a market cap surpassing $2.7 trillion and more than 580 million users. The report reveals a growing interest in retail adoption, with nearly half of global consumers open to using cryptocurrencies as a payment method. This trend is supported by increasing institutional interest, with more than 60 banks investing in blockchain projects and many countries exploring central bank digital currencies. As we look towards the future, it's clear that the crypto space in Central Asia is vibrant and evolving. Kazakhstan and its neighbors are embracing digital transformation, and with continued regulatory developments, the region is poised for further growth in the digital assets sector. All right, that's a wrap for this episode. If you enjoyed this brief and would like to stay updated on latest episodes, don't forget to click follow in your podcast app. Also, for a full list of all our daily briefs, check out the link in the show notes. Thanks again for listening, and hope to catch you next time.